We think we're going to see quite a choppy outlook over the next 6 months. On the one hand, the macro drivers, whether it's the Fed rates, central bank rate policy around the world, the strength of the US dollar, concerns around a recession risk on a global basis and inflation risks all suggest that gold prices should be heading lower and most likely dipping below $1,800 per ounce. But on the other hand, that geopolitical risk premium has really pushed prices considerably higher. In fact, we think much of the upside momentum that we've seen over the past couple of weeks has been driven by the geopolitical risk premium. And a lot of that came on the back of short covering activity initially, but now we're looking to see if it gets carried through with longer and more established interest in the gold market. But typically that geopolitical risk premium tends to fade after about 30 days. And that's when we think the macro headwinds will set in again and push gold prices lower. And then it won't really be until the end of next year when we start to see some of those headwinds lifting and gold prices rising again.
Suki, to what degree did you feel that gold's safe haven status was challenged by cryptocurrencies? And given that they have fallen out of favour and now come back again, where do we stand in terms of that particular dynamic?
It's an interesting one because we haven't seen a direct correlation in the price action for gold, and neither have we seen a direct correlation when we look at ETF flows. Typically, we'd say the investor who is looking at the gold market is looking for a safe haven asset, a portfolio diversifier, something that reduces volatility across the portfolio. Whereas when we're looking at the crypto space, it's a very different market. We're looking at higher volatility. We're looking at short-term gains, sharp moves to the upside or to the downside, so much more speculative in nature. Gold tends to come into its own when we're looking for risk that can be diversified. So looking at geopolitical risks, whether it was invasion of Ukraine, the Israel-Hamas conflict, whether it was concerns around the pandemic, gold tends to react in a very different way to other asset classes. In fact, in the current environment, gold has been one of the few to benefit as a safe haven asset.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.